Let's go ahead and take a look at some of these Fidelity index funds now that are going to be some of the best options out there for your short list. The first one we're going to look at here is the Fidelity Zero Total Market Index Fund. And this is among the Fidelity index funds that come with no transaction fee, no minimum investment, and zero expense ratio. If we take a look here at the details on the return over the last year, this has had a 28.84% return, but that's been pretty crazy because the last year has been a great time in the market. So you wouldn't expect something like that to happen every single year. And if you look at the 5-year as well as the lifetime performance here of 14% and then about 12%, that is more like what we were talking about at the beginning with the average annualized return from the stock market. If you scroll down here, we can see the hypothetical growth of $10,000 invested in this fund over time. And one of my favorite things to look at here is the top holdings, because it's pretty crazy to see just how much of your money is going into these mega tech companies. So if you invested $100 in this particular index fund, about $6.30 goes right into Microsoft, about $5.70 goes into Apple, $3.20 goes into Nvidia, and so on. But it's crazy because these companies have become so valuable. Since it's a market value weighted index, they carry a much larger slice. If we scroll down further, we can get information about the top sector, and that is going to be information technology. 28% of your money is going into that category, and this is going to be mostly domestic or US exposure, coming in at 99.45%. Now, if we look at the composition tab, we can get more information on the other sectors that are represented here. As mentioned, information technology was the top, but we also have a lot of money going into financials as well as healthcare and consumer discretionary. And just to show you the fees here so you're aware, it's coming in at an expense ratio of 0, as it is one of those Fidelity Zero funds. The next one we're going to look at here is the Fidelity Zero International Index Fund. Now, what you will notice about this is that the average annualized return is lower, as the US stock market is often going to be the leading market in terms of the highest returns. But even so, over the last year, this has returned a little over 13%, and the lifetime return here is about 4.5%. If we look at the top 10 holdings here, we can see a lot of foreign companies here. The Taiwan Semiconductor Manufacturing Company, we see Nestle, as well as Samsung Electronics, the Toyota Motor Corp, Tencent. So a lot of names that many of us are familiar with. And if we look at the composition here, we can see that 99.81% of this fund is in international equities, with a small amount in domestic equities, 0.18%. So if you wanted to have some international exposure in your portfolio, you could incorporate this as part of your asset mix. Next up on the list here, we have the Fidelity 500 Index Fund. This is going to be comparable to your Vanguard S&P 500 index fund, and this here has an average return over the last year of 30.45%. And if we look at the last 10 years, it comes in at 12.69%, more in line with what we were looking at with the first example. Now, if you wanted to invest in the S&P 500, this is a very solid avenue for doing so. However, we have exited the Fidelity Zero territory, and at this point, we are coming into some low expense ratios. This particular fund comes in here at 0.015% expense ratio, which is very low, but it should be noted just so you're aware. And since we're just looking at 500 companies in this case, instead of a much larger basket, you're seeing even more concentration into the top names. So in this particular case, about 7.2% of all of the money that goes into this fund goes right into Microsoft, 6.6% goes into Apple, 3.7% goes into Nvidia, and so forth. And if we take a look at the composition here, this is 99.36% domestic equities or US companies. So it's, again, the 500 leading companies in the United States, giving you diversified exposure. 29.43% of your money goes into information technologies, about 13% in financials, 12.7% into healthcare, and about 10% going into consumer discretionary. The next fund we have here is the Fidelity Large Cap Growth Index Fund. So let's say, for example, you're a young person and you want to be more aggressive with the stock market. This has more of a focus on growth stocks, which are rapidly expanding and growing revenues. As a result of that, we can see the return has been much higher. over the last year, coming in at 45.96%. However, just be aware of the fact that growth stocks are going to take more of a hit during a recessionary environment or something like that. So you are basically setting yourself up for more potential downside, even though there is more potential for upside. And the portfolio composition here is even more tech heavy. 12.15% of the money goes right into Microsoft, 11.16% goes into Apple, 6% into Nvidia, 5.74% into Amazon, and so forth. So if you wanted a tech-heavy portfolio, for example, as a young person, this might be an index fund for you to consider. And if we go up here and take a look at the composition, we're going to see that 44.26% of this entire portfolio is in information technologies. So you're heavy in tech with this particular fund, giving you a lot of upside potential, but it's also going to be more downside if we see a bear market. Now, as mentioned before, it's going to become more and more important to begin allocating your money into bonds and not just equities as you get older. So I wanted to include a bond fund on the list here as well. This is the Fidelity US Bond Index Fund, and this is going to be a much lower rate of return because the idea with bonds is just to preserve your wealth and outpace inflation, not so much looking to have the potential for upside, but also a lot of downside. So over the last year, that's a 3.3% return, and the 10-year performance here is at 1.41%. However, take a look at the yield here in this case, which is coming in at 4.41%, because bonds are mostly about the yield being paid out in those dividends and not so much returns being generated from the underlying value of the shares. And if we take a look here at the composition, we can see that 40% of this is in US Treasuries. We see 26% in corporate, and there's also some money in mortgage-backed securities. I don't see any municipal bonds represented here, but the three categories of bonds are going to be your municipal bonds, corporate bonds, and then US Treasuries. Environmentally conscious investing has become more and more popular, so I did want to include the Fidelity US Sustainability Index Fund for those looking to invest in companies that support sustainability for our planet. And it's pretty cool to see here that this has had a really solid return as well. Over the last year, just shy of 34%, and the lifetime return of this fund here is 14.35%, so I definitely wouldn't sleep on this one. It does have a little bit higher of an expense ratio at 0.11%, but it might be worth looking into for further research. If we look at the top holdings, it is similar to what we have seen in terms of Microsoft and Nvidia, but you're not seeing Apple, for example, represented here. As to why that is, I'm not sure. You know, it depends on what their ESG goals look like and that kind of thing. But it is a lot of your money going into Microsoft, Nvidia, Alphabet, Tesla, Eli Lilly, and then you have Visa, Johnson & Johnson, et cetera, et cetera. 30% of this roughly is in information technology. We can see that healthcare is the second biggest sector represented, followed by financials and then consumer discretionary.